What is going on, guys? Nick here, back with another video. If you could go back in time to September 2011 and choose to invest $1,000 in either Apple, Amazon, Facebook, Google, or Domino's Pizza, what would you choose? Most people would probably pick the tech stocks, but they would have missed out on the biggest returner of them all, Domino's Pizza. Just a $1,000 investment in Domino's in September of 2011 would be worth about $19,000 today. So I thought I'd take a look at Domino's Business and see just how well they're doing. I'll also figure out what I think the stock is worth and if Domino's is still a good buy. Of the major restaurant chains in the US, Domino's Business was set to handle lockdowns better than most. As one article pointed out, pizza is the ultimate quarantine food. It travels well, can feed a whole family, and holds up as leftovers, and that's been particularly good for Domino's. In July 2020, Domino's reported earnings and announced its sales jumped 16% compared with the same quarter the year before. During that same quarter in 2020, when most restaurants were just trying to stay open, Domino's actually opened a net of 39 new US locations and 45 net international restaurants. Over the past decade, Domino's has done a great job in investing in digital infrastructure, rolling out features like hotspots where people can order pizzas at locations without addresses. For example, while they're sitting at a beach or at a tailgate. One of the best moves Domino's made a long time ago, in my opinion, was their online order system. A study by highspeedinternet.com found that 52% of millennials feel anxious making a phone call. The study also found that 50% of millennials have asked their parents to call and make appointments for them. So it makes sense that millennials would be more interested in ordering if they didn't actually have to make a phone call. By 2015, half of Domino's orders were through the app or the website. One of the best features is the famous order tracker they released in 2008, where you could see exactly when your order was being boxed up and sent out for delivery. At the time it was launched, it was really unique. There was really nothing more exciting than seeing your order is out for delivery and knowing that you'll have pizza within 10 to 15 minutes. Now, it made sense that Domino's and pizza in general would do well when most places were locked down and people were stuck at home. A lot of people expected as things reopened that demand would fall. But that's not what happened. Domino's CEO Richard Allison explained that in areas with fewer COVID-related restrictions, Domino's actually saw higher levels of sales growth. He also pointed out that Domino's and other large pizza chains were taking market share from independent pizza places. However, Domino's has struggled to find workers. They plan to address this by implementing higher wages across some of the corporate-owned markets. Richard Allison said that staffing struggles made it much harder for them to open new restaurants. On top of not being able to find workers, they're still seeing construction and permitting delays, as well as equipment shortages caused by the pandemic. Now, Domino's is the largest pizza company in the world with a much larger international presence than most people probably realize. Domino's has about 18,000 stores, with only 6,400 in the US and 11,500 located internationally. While the US is the largest market, surprisingly, India is number 2 with 1,300 stores. 98% of Domino's locations are actually franchise locations. The business that you're looking at buying stock in is really all about collecting these franchise fees from their restaurants. If you aren't familiar with how franchising works, here's a quick overview. People interested in running their own location will apply to Domino's for a franchise location. Domino's gives preference to those who are already working for the company when applying for a franchise license. They offer franchise management school where store owners will learn how to open and operate a store. Domino's requires a $25,000 franchise fee, which is paid directly to Domino's as an initial fee. You also need $75,000 in liquid capital, meaning cash or some kind of asset that you can quickly turn into cash. They require you to have a net worth of $250,000, and then after all of that, you still have to pay to design the store and buy the equipment, which is estimated to cost somewhere between $120,000 to $460,000. Once your location is up and running, you'll have to pay some of your revenue back to Domino's. 5.5% will go back for royalties, 4% for the Domino's ad fund, and 1 to 4% for co-op ads. So about 10% of your revenue is taken away with fees. On top of all of that, you still have to pay employees, buy equipment, ingredients, and maintain the building. The contract between Domino's and their franchisees are set for 10 years. But for all of that cost, franchise owners get access to a brand that sells pizzas on its own. The business model is already designed and developed, and they have a much higher likelihood of success than trying to open their own restaurant. For all of that safety, they give up some of their revenue to Domino's corporate. Now, Domino's breaks its business down into 3 segments: US stores, international franchise, and supply chain. The US stores and international franchise segments are their franchise and corporate stores in each geographic area. The supply chain segment is actually a pretty interesting part of their business. They operate 21 dough manufacturing and supply chain centers in the US, 2 thin crust manufacturing facilities, 1 vegetable processing center in the US, and 5 dough manufacturing and supply chain centers in Canada. This business also includes 900 tractors and trailers. These supply chain centers produce fresh dough and take care of the logistics of delivering food to all of their US stores and most of their Canadian stores. Okay, so let's take a look at how the business is actually performing. Looking at the revenue and net income, we can see a business showing very steady and consistent growth. In 2011, they were making $1.6 billion in revenue and $105 million in profit. And over the last year, they produced $4.3 billion and just under $500 million in profit. When we go to the revenue versus expenses, we can see that the majority of their costs go into the cost of revenue. They said that these costs are from the US company-owned stores and the supply chain business expenses related to food, labor, delivery, and occupancy costs. So looking at their store counts, we can see the quickest growing area and largest area is the international stores. As of the most recent earnings release, Domino's reported 11,631 international stores, 6,060 franchise US stores, and 336 corporate-owned stores. When we look at the revenue and profit for each of their segments, we can see the supply chain business is actually the biggest driver of revenue. All of the US stores have to buy from the supply chain business, so Domino's does have a captive audience here. What stands out to me is that even though most of Domino's stores are located in the international segment, most of the revenue and profits from their stores come from the US market. However, there's very little cost to Domino's international franchise restaurants, which leaves Domino's with an insane 80% profit margin. Even though each segment produces very different amounts of revenue, they still all produce similar amounts of profit. Now, when we split US store segments into corporate versus franchise locations, I think we get a clear picture of what's going on. We can see the US franchise segment provided a much higher profit margin than the corporate-owned stores, which is pretty typical with the franchise model. Now, I do want to point out that this information comes from Domino's reported financial data on their annual and earnings reports. But when I added the operating income, or what I'm calling profit margin, on this chart, it doesn't actually match the numbers broken out by segment. Without getting too far into it and boring you guys, on the income statement data, I think they just left off some of these costs. Domino's balance sheet reported $1.7 billion in assets to $5.8 billion in liabilities. This leaves them with negative $4.1 billion in equity, which basically means if you add up everything they own of value, like cash, land, buildings, equipment, etc., it only adds up to $1.7 billion in value. Compared to their liabilities, primarily long-term debt, the liabilities outweigh the assets by $4.1 billion. Domino's debt comes from Bain Capital's purchase of the company in the late 90s, when they financed over $700 million of the purchase with debt. Domino's recapitalized this debt in 2007 by issuing $1.7 billion in notes, which basically just means they turned the debt into something else, in this case notes, which are similar to bonds. Domino's has continued to retire debt by basically issuing new notes and sort of just kicking the can down the road. Personally, this isn't something that I like very much, but Domino's does seem able to pay the debt for now. However, it is something to pay attention to. So let's take a look at what Domino's stock is worth. But before I do that, if you guys could take just 1 second and scroll down and hit the like button, it would really help me out and I would really appreciate it. So if we look at Domino's forecasted earnings, we can see that analysts are still expecting a continuation of the trend we've been seeing. They're currently expecting Domino's revenue to grow to $5.1 billion in revenue and $655 million in profit by 2023. Looking at their revenue growth, we can see pretty steady, consistent growth. The analyst forecasts currently project Domino's to remain over 7% growth over the next few years. But net income growth is a little harder to read. It's very up and down, so I included a 4-year moving average to smooth out the line. It seems like the current forecasts have Domino's continuing to grow profits over 13% going forward. So I think for Domino's growth rate, I'll use a 13% growth rate for the top line expectation, and for the bottom end, I'll use 10%. If we go over to our fair PE calculator, our bottom end growth rate of 10% gives us a fair PE value of 23. And for our top end number of 13%, this comes out to a fair PE value of 30. When we look at this on a chart, we have Domino's current stock price shown as the orange line. The green area is a clearly undervalued stock, and the blue and gray area is fair value based off of the earnings estimates. This valuation suggests that Domino's stock is pretty expensive, not hitting the top end of our fair value range until 2023. Now, if we look over at macrotrends.net, we can see that Domino's stock has recently traded between 30 to 40 PE over the past 5 years. And if we go back to the revenue and net income growth, this does make sense when we see the company was growing at a faster rate. If the current analyst forecasts are accurate and growth is going to slow down from around 20% to the mid to low teens, I expect the PE ratio the stock trades at will fall to around my fair PE value. So I don't own any Dominos stock, and after looking at the business model, I don't necessarily plan to buy any soon. I like the franchise business model and a lot of what they've done over the past decade, with the only exception being them continuing to write off debt by just issuing more debt. I even think the pizza is pretty good. And if you guys haven't tried the cheesy bread, holy crap, next time you order Domino's, you have to get the cheesy bread. However, I don't think that the current share price of $514 is currently worth the underlying business that you're getting for that price. If you currently own Domino's, I would rate it as a hold, and I probably wouldn't add much to the position right now. I don't think the company has gotten so expensive that you need to sell. I just don't think the company is currently worth buying at today's price. Now, if you like this video, make sure you subscribe and hit the bell notification so you know whenever I upload a new video. And as always, thanks for watching.